Welcome to today's backtesting episode here with me, the 10-minute stock trader Christopher Ewell on Benzinga. I got to tell you, this has been a market. This has been, and we'll talk more about it in just a couple of minutes. But I tell you what, this market, the ups and the downs, that's quite the roller coaster ride. And I'm sure that you've got a lot to talk about this week. So let's do this. Let's talk together. And the way that I can have you talk with me, because I want to talk back with you, is by going into the chat box right now, typing in two things for me. Type in the stock that you made the most money on this week, the one that you're so proud of. And it could be puts, it could be short stock, it could be something long. I don't know. You tell me where you did it. And then I also want you to tell me the stock where you lost your lunch money, right? Because I know that probably happened too, right? Where you're like, oh, I can't believe I made that trade. Oh, that was such a boneheaded move. I can't believe I did that. Let's talk about this. There's no judgment here. The only thing that I want to do is give you the best data possible to make the most informed decisions possible in your trades and develop a trading edge with you today. So let's get right into it. This is the How to Trade Stocks and Options podcast, brought to you by 10MinuteStockTrader.com, where we cover finance, stocks, options, entrepreneurship, education, and money. And here's your host, voted one of the top 100 people in finance, Christopher Ewell. Are you ready to finally learn how the market really works? Well, now's your chance. I have a free book for you over at secretinvestingbook.com. And this outlines 13 of the biggest secrets that Wall Street doesn't want you to know, like how to get a positively unfair advantage in the stock market. This is everything you're going to need all in one place. And the way to get this is by going to secretinvestingbook.com. Now, this book is free. It is free for you. I paid for the book. I just need you to help me out by covering the shipping from our office to your house. So go to Secret Investing Book right now, get your free copy today, and I'll ship this out right away, and you can get the positively unfair advantage in the stock market by reading these 13 secrets that Wall Street does not want you to know. So get your free book over at secretinvestingbook.com today. Markets are people. People are predictable. Outlier can show you how to track market fear and greed with artificial intelligence on over 1,300 of the largest market cap names. Visit outlier.com to learn more. That's OVTLYR.com. They have a free pilot program for the rest of 2021 so you can get access to right now at OVTLYR.com. That's OVTLYR.com. The How to Trade Stocks and Options podcast is now exclusively on ShareVision.com, the first dedicated streaming platform for the world of finance. And that's where you can find us every single week over at ShareVision.com. Just head to ShareVision.com to learn more and type in 10-minute stock trader in the search bar. Come like and subscribe. I can't wait to see you over there at ShareVision.com, the first dedicated streaming platform for the world of finance. Well, like the intro says, my name is Christopher Ewell. My website is 10MinuteStockTrader.com, and there we teach people how to take the guesswork out of trading in only 10 minutes a day. So if that sounds good to you, come check us out. Also, I just want to mention right now, at the end of today's episode, I want to be giving you a free copy of my latest book called The Secret Investing Book. I have bought these. They're literally sitting on the shelf over there. I want to send them to you, real paperback books, for free. And I'll tell you exactly where to go at the end of this episode to show you exactly how you can get that book for free. So thank you guys for coming. Be sure in the chat box to put in the stocks you made the most money on this week and the stocks that did not work out for you. While you're doing that, I want to take a look at the market. I want to see what's going on out there and give you my perspective. So the way that we trade inside the 10-minute trading room is we follow a very structured plan that we call the 10 minutes to freedom trading strategy. And in that, we need to find exactly a top-down approach, right? We want to let the market tell us which way it's going rather than us trying to impose our will upon the market. Now, we start with the market, of course, every single time. And the way that I make the call of which direction it looks today is by looking at a few key things. The first is the S&P 500 moving averages. Then next is MMFI. This is our market breadth. And then finally, our FinClub, our artificial intelligence data provider, We need to see a confluence of all three of those items in one direction, bullish or bearish, to let us know which way it's going. So let's first take a look at the S&P 500 moving averages. Now, we did just have a death cross here, right? Now, I know a lot of people are watching this. Now, I'm using the 50-day exponential. If you use the 50-day simple, I know it's a little different, but for me, this shows a death cross right now. And what I see here is not looking good. This is not long-term bullish moves here. Even though today we're up 2.76%, this is not a bullish environment at all. Now, we look at the blue line. This is our 10-day exponential. When it's below the 20-day exponential and price below the 50-day exponential, so the blue line under the black line, price under the red line, that's a bearish environment, without a doubt, hands down whatsoever. And that's been the case for a while now, right? And you just see it play out. You just see it play out going down. Now, I'm not a perma bear, perma bull, or perma anything. I'm an opportunist, and I hope you are too. So I'm trading both sides of the field here, trying to find where it's going. Now, also, next I like to look at the MMFI. This is the market breadth. This tells us how many stocks are bullish, right? And if 37% of the S&P 500 is above their own 50-day moving average, that means 63%, if my math is right, are bearish, right? You've got the market trend going down. You've got the market breadth going down. You click those together, that's clearly the market direction we're looking. And I would definitely say, don't trade against that, right? Don't try and think that you're smarter than the market. Just follow it. Just let it tell you where it's going. All right, looking over at the chat right now, what are you guys doing? Blow this up, right? We need to have some more participation in order to make this work. I can't backtest only 4 stocks. We got to do more than that. Let's look at Papa Bear. I'm not sure if SPY was a winner or a loser for you. Be sure in the chat to let me know what you won on this week and what took your lunch money. And listen, there's no judgment here. It's okay. Young Killa had a killing on AMD, it sounds like. Oh, there he goes. Papa Bear gains the week for SPY. USEG. All right, we'll take a look at that. SPY calls. Stopped trading daily options. Biggest losses over the last 2 weeks for SPY options on the daily. Okay. And Mitch is like, let's go, people. Come on, light it up. So here's what I'm going to do. I am going to start building our backtest scenario up right here. And then be sure in the chat, let me know what you see, what you did this week. I want to do this, and I want to do this for you. All right, so here's what we're going to do. I'm going to clean up my charts totally. I'm going to take off all the drawings. I'm going to take off all the moving averages except for the 10-day exponential moving average. Now, people trade just one, you've heard the YouTube gurus, right? This one simple line, all that stuff. We can actually trade on this today. We can develop a positive expectancy on these stocks, and you can know as you trade over the coming week what actually has a really strong back test, and maybe even pad your pocketbook with it, right? So let's build our back test here. So I'm going to go up to Strategy Tester, and I'm going to move myself out of the way so you can follow along. Our entry criteria will be adding a parameter for condition, price, close. So we're only looking at the end of the day is greater than the indicator of the 10-day moving average. Doesn't take a lot of coding, doesn't take much other than saying price greater than the 10-day. So price above the blue line. Now we're going to add an exit criteria. Add a script for condition, price, close. Remember, end of day is less than indicator of the 10-day. So in 2 lines here, we said enter when price goes above the blue line, exit when price goes below the blue line. Let's see what happens. Oh, and also I want to run it on 1,000 candles. I mean, you could do it back 7,000 days worth of data, but really, in my opinion, if you can have 1,000 data points, that's going to tell you exactly what you need to know and be as recent as makes sense to be. Now, doing so, we're going to see a couple numbers here. The first number is the back-tested results. This is following a strategy. This is positive expectancy. The other number here, this is what happened over the course of the last 1,000 candles. 1,000 candles to go to now, the S&P is up 56%. And remember, you have no control over that. So you may see some pretty wild swings between the two here. But what we're going to focus on is this number here, the first number here, because we have control over that by following a strategy. So in the chat box, light it up. Let me know what we're going to look at here. First, we're going to go to Poppable. We're on the SPY right now, and running this back test, we get a 16% return versus a 56% return on the stock. Now, keep in mind, we have no control over what the SPY does, but we do have control over an entry and exit following a simple criteria here. And I'd like to point out, right, there's times where you get in here in October and then you don't even touch it until November 29th, basically 2 months without having to make any moves whatsoever. And then also following a strategy like this, when it goes down in January and you don't touch it again until the end of January, that's 2 weeks of headaches that you just completely avoided. So Papa Bear or Papa Bull, I would definitely be checking this one out, but keep in mind, right now is not the case because it is below that 10-day. It may have had a huge move up today, but there are no 10 days, or is it 10 days under the 10-day? So watch for that, Papa Bull. Appreciate you there. Let's go look at AMD. AMD was my biggest winner last year. Definitely a strong one to trade. The AMD is up 871%, right? Like I say, totally random from when we started until now. We can't control that. But what we can control is entry and exit points. So 158% return. That's definitely one you'd want to keep on your radar. Although right now, still, just like SPY we mentioned a minute ago, below its 10-day moving average. So for me, I'm going to hold out. But Young Killer, this could be a killing for you coming up pretty soon. We need to see more people in the chat. What are we doing right now? We got 91 people at least watching this, and we're almost out of ideas. So do me a favor. Put in the stock that you made the most on and the stock that took your lunch money this week. I'll tell you a couple that I worked on. CPNG. This is one where I was trading it short, and then today, it reversed hard. It was up 12% or so from the time I exited. And, keep in mind, I was trading it short, and boy, it definitely worked against me. But then again, too, I had a couple winners this week in Peloton and in Fastly. Both of these were, the monster growth stocks that everybody wanted to watch. Everybody was trading, but these two I've been short on, and these two I'm making some pretty good money on. But yeah, that's it for me, right? Peloton and Fastly were my big winners. CPNG, definitely my big loser. Now let's go to USEG, USEG. So USEG, US Energy Corps. I bet. Oh boy, yeah, this has had a week, right? Or a couple weeks, I should say. Keep in mind, if you are following this back test, it has gone down 52% in the last 1,000 candles, and this back test, if you're going long, shows a negative 17% return. If I'm looking correct. No, I was thinking maybe it had a reverse split or something, but no, that's not the case. So just keep that in mind. If you're trading this, if you're making money on it, be in and out quick because that back test does not work for you long term. So I appreciate you doing that one right there. Perfect. Let's see. Etienne. SE on the short side. Cool. So we're only going to back test long for the sake of time on this episode, but I definitely want to talk to you about this, right? Certainly looks like a nice winner here going short, so I agree with you there. But keep in mind, right, the stock is up 800% in the last 1,000 candles, and following the strategy is up 300% going long. So while you went short, this definitely has some setups for going long too. So I appreciate that, Etienne. All right, so any for real, says DraftKings. Let's see. Let's go look at DraftKings. So DKNG, I believe. Yeah. DKNG. So this is definitely one of the reasons we backtest, right? 84% on the stock in the last 1,000 candles, 185% following the strategy. So basically, if you waited to trade until it went above the 10-day, and then you got out when it went below the 10-day, just one time a day, right? This is not day trading. This is just end-of-day numbers. You would have 100% more return than just have buying the stock and holding it. Now, I know DraftKings has had quite a run. If you look back, Yeah, DraftKings is definitely one of those stocks that has lost a lot of favor right now. But hey, the back test doesn't lie. 185% return. Thank you for that. Mr. Money Mitch wants to talk about cat. He wants to talk about the cat. All right, Caterpillar. Big week in Caterpillar. Now, when you see this blue cloud out here, that means it's still active. It's still online right now. 37% on the stock, 39% following the back test. And keep in mind, as long as that back test shows positive, I'm interested. I'm interested because that's a positive expectancy. You talk about trading, you talk about having a positive edge. This is your positive edge. That's what we're working on right now. 39% for cat there, Mr. Money Mitch. Now, also, this is blowing out its back test. So I wouldn't be surprised if it might come back a little bit before going and moving up along with there. So that was a good one there. Etienne's asking about cat. Let's talk about DE. Etienne mentioned that one. All right, John Deere, 132% for the stock, 79% for the back-tested trend line there, right? That's still a huge, really good result. But look at this volatility right here. This has been absolutely nuts. Let me make this a little bigger. Look at the volatility here, right? From the low to the high, we're talking 25% in the span of 7 days. There's a lot going on in this market. I got to tell you that. But just be careful out there. Keep your risk in check. Mitch is saying they're almost moving to opposites right now. Speaking of opposites, let's do the opposite. Let's put more in the chat box. Let me know what you made the most on. Let me know which one didn't work out for you. We'll have a conversation. We'll backtest it here together. Michael says, got in the short side of CVS today. All right, let's look at CVS. CVS, you got it? Oh, I traded this one before. Traded this one. I'm going to remove all the annotations on this. Traded this one. So you got in it today on the short side. It did cross under its 10-day. Like I said, we're not going to do any short back tests here for the sake of time. But yeah, the result here does show if you're going to go long to go in over the 10-day, because you're going to get a 40, not going to get, but the back test results show a 40% return. So because it is under the 10-day, you may have some legs there, but be mindful if it goes the other way and goes up. I would close this very quickly because it does show a very strong back test. So keep that in mind. I've lost my spot here. Okay, that was Michael's. Let's go to, I don't know what that is. Let's go to that one. Let's go to VUR? No, I don't know. I'm sorry. I'd like to help with that. If you don't mind putting it in the chat again with a little more explanation of what you want me to backtest, I got you. Let's look at Mario in URA, Uranium ETF. Yeah, uranium has been on a run right now, right? So 100% on the back-tested results. So doubling your money in the back-tested results. Also, 99% in the stock. And this is a very open back test with a lot of strength behind it. So Mario, if you like this one, and anybody else who likes uranium right now, I'd like you to smash the like button. Do it right now. If you haven't already smashed like, and I've talked about your stock, you owe me. All right, let's look at Ford. Money Mitch is talking about Ford. All right, Ford. Yeah, just wasn't it like a week ago, Mitch, that this one had like a bump, right? How much was that? I remember hearing about it, but I didn't trade it. Yeah, 15%. And then all of that's gone. That's this kind of market right now. All of that's gone. 51% return following just the stock. 84% following the back test. But it's not on right now. So you'd have to wait to see it cross above this blue line for this back test to be valid. So this is definitely one that looks really strong in the future, but at the moment, it's a pass. It's a pass. That's okay. J Rice. Let's talk about CRWD. J Rice is looking at CrowdStrike Holdings. Look at that. Nearly the exact same return for the holding the stock and trading it with the 10-day there. Very interesting. Yeah, this one definitely looks like it's got a really strong potential once it clears back over that 10-day. Keep in mind, when we backtest these, the market environment has to be right. The market has to be right. When the market's right, when it's above that 10-day, this one has legs. But right now, the best trade to make on this one is in cash. Let's see, MQ. All right, so MQ is down 68% in the last 1,000 candles. Definitely not a place I'm looking to go into long. And then following the strategy just does not work for this stock, down 38%. And that happens, right? Whenever I trade these, I always tell my traders in the 10-minute trading room is that, hey, we're looking to get into these stocks when the stocks are set up and when they show a positive expectancy using our strategy. You come to a stock like this and you say, you know what, the strategy doesn't work for it. Either you change your strategy or you change your stock. You definitely don't try to fit a round peg in a square hole kind of deal. So yeah, that's definitely one worth taking a look at. Maybe trying a different strategy. Maybe it'll work better for it. ASAN. Let's look at ASAN. Oh, cool. Check it out. So the stock is up 69% in the 1,000 candles, while the backtest is up 125% in the last 1,000 candles following the strategy. And I love pointing this out. When you follow a strategy like this, you may get chopped. You may have, entries and exits like this, but you get out before these big ugly moves happen, right? You get out before. You're not hoping and wishing and praying that when it has its 45% down move in 3 weeks, you're out. You're sitting on the sideline, counting your cash because you're out. So yeah, Jay Rice, thank you, man, for that one. Alan R. He wants to wish upon a wish. Wish upon a wishing star. All right, let's look at Wish. Wish looks rough. Wish is really, really rough. So the stock is down 90% in the last 1,000 candles. That's a bad start. The strategy also doesn't work for it either. Down 54%. Alan, I would either take a look at a different strategy where you're following a trend, right? Because you got to have a trend to go from, $1 to $5. You're never going to get there from 1 to 5 unless price moves up. So that's why we trend trade. But also keep in mind that this one has a pretty negative back test. So you're going to have to try a couple different things or try a different stock. So thank you for that, Alan. By the way, if I talked about your stock and if you're finding this useful, smash like. I only have about 5 minutes left because at the bottom of the hour, Benzinga is hosting, I believe, correct me if I'm wrong, Mitch, I believe Benzinga is hosting a International Women's Day conference panel there. So that's pretty cool. So be sure to stick around for that. But before we do, I will do one more for DK. This is my last one of the day on Kroger. Kroger, this is one of those times where this is a better stock to buy and hold than to trade. It's 135% buying and holding it. Now, granted, past performance is not indicative of future results. You always got to keep that in mind. But if you traded it, this strategy just does not work. And that's okay, right? Negative 2% trading this up and down versus 135% just buying and holding. That's not always the case, but keep in mind, throwing a dart 1,000 candles ago versus having control over when you enter and when you exit. And that's okay. You just got to test a different one. Thank you guys so much for all your participation here in the chat. I do have a little bit more. This is what I like to call the final thoughts. So I'm a huge believer in trading psychology. Honestly, if you don't have your psychology right, you're not going to be successful as a trader. It's true, right? The hardest part of trading is in between your ears. And one of the things that I like to do every single day with my traders in the 10-minute trading room is talk about trading psychology. And in a market like this, I think this is so vitally important. This is from Trader Lion. They're having several posts talking about Paul Tudor Jones, billionaire trader, who I think it would be worth your time to learn from. He says, first of all, never play macho man with the market. Second, never overtrade. Boy, I tell you, in a market like this, where we're having huge moves both directions, it's a very bearish environment. The very last thing that I would recommend you do is play macho man with the market, right? Keep your risk really tight. keep your risk in check, and be sure to not let either of those things get out of control. Keep your risk in check and make sure that, hey, if it's working against you, don't sit there. Don't wait. Don't let it say, hey, I'm going to give it a couple more days. Because in this market, a couple more days could just wreck you. We don't know which way it's going to go, but be sure to keep that risk exceptionally tight. Now, I mentioned earlier at the beginning of the show, there is a place where I have purchased these books and I want to send you a free copy. The Secret Investing book. There are 13 secrets in here that Wall Street doesn't want you to know, right? And I have all these copies that I want to send to you for free. The way that you can tell me your address so I can send you one for free is by going to secretinvestingbook.com. Go to secretinvestingbook.com right now. You will see me looking right back at you, holding the book just like this. I want to send you a paperback copy in the mail. Just send me your address so I can send you a free copy of the Secret Investing book. Thank you, Benzinga, for letting me come on and hang with all the Benzingers today. Thank you, everyone, for your participation in the chat. Be sure to stick around more for the International Women's Day panel coming right on after this. And thank you so much for coming to today's live trading and backtesting. I'll see you here next week. Hey, don't forget, before you head out, head to secretinvestingbook.com right now to get your free copy of the Secret Investing book. This is how to finally get a positively unfair advantage in the stock market. And it has 13 of the secrets that Wall Street does not want you to know. And I want to send this to you for free today. Just help me by covering shipping. And the way you can do that is by going to secretinvestingbook.com. That's secretinvestingbook.com. And I'll ship this out for you right away.